We've spent years in the lending industry and we've tracked dozens of lenders. I want to pull all that information together and give you a horse race on which lenders would be best for consolidating your debt. Consolidation can be a really effective tool to help you pay off debt and get on top of your finances, but not if you do it wrong or go with the wrong lender. Companies would love to have you pay them all the interest you are currently paying to multiple lenders. Of the lenders we track here at the Yukon Project, all of these mention on their website that you should consolidate your debt with them. But spoiler alert, not all of them are good for debt consolidation. In fact, some of them would be quite bad for debt consolidation. I am going to judge these companies on more than 20 different metrics, which include things like APR ranges, loan ranges, fees, flexibility, features, reputation, discounts, transparency, availability, and business type. Let the race begin. The point of consolidating credit card debt, or any debt really, is to lower the interest rate. So right off the bat, I'm going to eliminate 60-month loans, net credit, and RISE, because they don't appear to have APRs low enough to make debt consolidation worthwhile. It just doesn't matter what other benefits they provide. They are just too expensive to consider for debt consolidation. I am also going to remove Mariner Finance, One Main Financial, and Regional Finance because they aren't transparent about the policies before you apply. They want you to come into their stores and formally apply before the details are put before you. I don't play that game. If they won't allow potential customers to research their options before they are subjected to the pressures of a sales force, I'm going to assume the worst. How much a company will lend you is important, obviously. If you can't get the amount you need, you're left with suboptimal solutions. So let's advance the brands that will lend more than $40,000 in case you have a lot of debt. US Bank only lends that much to current customers who already have accounts with them. We'll also advance the brands that will lend less than $5,000. After all, the average credit card debt in the United States is $8,000. So there's a lot of people out there who just need to consolidate a few $1,000s. Offering a good range to customers is really important. A big issue is the cost of the loan. Of course, this is not an easy thing to evaluate. The rate you get will depend on your personal financial and credit situation. But we will advance all the brands whose top rate is below 25%, because with that cutoff, it is much more likely that you would be offered a rate that would be low enough to make consolidating a good idea. But the brands that didn't advance still have rates low enough, so it will depend on what they offer you. We're going to advance the brands that have an origination fee below 5%. An origination fee is a percentage of the borrowed amount that comes out of the proceeds of the loan. It's important to note that the origination fee is accounted for in the APR, so a high origination fee on a loan with a low APR isn't particularly bad. But if you plan on paying off the loan early, you do not get a reimbursement on your origination fee. So it's always a good idea to have a loan with a lower origination fee so you can save money as you pay the loan off early. I'm advancing Avant even though they have a higher origination fee because they actually do offer a prorated reimbursement. I am now going to advance all the companies that don't charge a late fee. We all hope to never have to pay a late fee, of course, but I especially appreciate the companies that don't charge them. It gives people a little bit more grace as they pay off their loans. Along with that, I'm going to further advance any company that doesn't charge any other fees, like failed payment fees, bounce check fees, account maintenance fees, or NSF fees. This next one is a big deal. I'm going to advance any lender that is willing to pay off your other loans directly when you use them to consolidate. It's really convenient, but I think it's far more important than that because it shows that they understand that the loan is meant to replace your other debts and not just stack on top of them. This should make it easier to get approved and lighten your debt load. And I think it shows that they are serious about debt consolidation. It's not just a talking point on their website. I am also going to advance any lender that will allow you to add a co-applicant or a cosigner to your loan. If you can get approved for a loan without a cosigner and get the amount you want for the lowest possible interest rate, then there's little reason to entangle a loved one in the loan. Remember, a cosigner agrees to be responsible for the loan if you fail to repay it. So being a cosigner isn't without risk. But if you struggle to get the deal that you need to make consolidating worthwhile, a cosigner can really help. Now I'm going to advance the brands that are widely available. Some lenders are only available in certain parts of the country. Others require you to be a member before you can apply. Some require you to be an existing customer for a certain amount of time before you're eligible. So this is how things stand. You can see that the top lenders for debt consolidation are Citibank, Discover, Lightstream, PenFed, Truist, and Wells Fargo. Now for the photo finish. Wells Fargo fades considerably because not only do you need to have a Wells Fargo account to apply, you need to have had that account for at least 12 months. Discover falls off a bit as well because you can't use them to consolidate Discover credit card balances. Citibank, Lightstream, and Wells Fargo get a little bump for having a couple of discounts that you can qualify for. Citibank just beats out Lightstream because Lightstream does not offer direct payoff of your other debts. And I feel strongly that having this feature shows that the lender is focused on people who are trying to consolidate their debt. So that's how the horse race ends up. There's pretty good spread in the results. But before we end, I will say that one of the most important things about debt consolidation is getting the lowest APR that you can get. If a lender lower down on this list will give you a better rate, that might be a better long-term option for you. That's why we always recommend that you shop around to make sure that you're getting the best rate that you can qualify for. At the Yukon Project, we try to make shopping around easy. If you visit our marketplace page, you can apply to any one of our featured lenders. Behind the scenes, we will check your rate with up to 40 other lenders. Our partners use a soft credit check, so applying will not hurt your credit. We will show you all the lenders who are willing to make you an offer so you can pick the one that's best for you. If you have any experience with any of these brands, add a comment below. We'd love to know what went well and what didn't go as well as it should have. If you found this video helpful, please like it and consider subscribing to our channel so we can continue to make videos like these. Thanks for watching.